Welcome, everyone. Great to see a lot of new faces at the conference. Normally, these conferences, we run into a lot of the same people all the time, and Kai does a great job bringing all of you together, and it's great to be here in Frankfurt and being able to present to all of you today. So I'll get right into it. I'm not going to waste your time on too much silver facts, but of course, being one of the largest silver producers in the world, I have to mention what our strategic metal is all about. You see the blue bar there. The mining sector has really been flat production for over 10 years. It's been producing. COVID, it was below 800 million, but it's generally speaking about 830 to 850 million ounces of silver production annually. It peaked at just under 900 million ounces in 2016, and it's been on a bit of a slide ever since. There's just simply no new silver mines coming online. So you've seen in the space, there's been a couple of major transactions just in the last few months. We were one of them. And that's the silver sector is shrinking in front of our eyes, and it's becoming harder and harder for investors like yourself to choose which company you should be investing in. The mining's we're consuming almost 1.2 billion ounces of silver annually, and we're producing about 830 million. So it's a very tight market. On a ratio basis, for every 1 ounce of gold being mined worldwide, the mining sector is only producing 7 ounces of silver. That's pretty shocking when you're in an environment where the trading ratio is 100 to 1. And it's only been 100 to 1 3 times in history. So that should tell you something that we will see ratio collapse coming. We're very leveraged to the price of silver. We're actually the purest silver company in the world of the large ones. 57% of our revenues in Q1 was silver, 33% was gold, and the rest is in the form of lead and zinc. We've got 4 producing assets in Mexico, which I'll cover briefly in this presentation. And as the moderator pointed out, we're the only mining company in the world that has our own mint, which we sell products to investors like yourself around the world. You can't talk about mining without talking about ESG. It's probably less important today than it was a couple of years ago, as many of the institutions and companies worldwide are changing their ESG strategies. But it's still a very important part of our business. Even from, I've been in this mining sector for 40 years. I put First Majestic together 22 years ago. And, it's our responsibility at these towns to take care of them. These mines are the only job in town. They're very remote generally. Without these mines, these would be ghost towns. If the mayor in town has a leaking pipe on Main Street, who gets the telephone call? We get it. We move our tractors in place, we go and fix the pipe or electrical system, or the schools rely on us for computers and paper and pencils, fixing windows, whatever the case may be. We're there. We supply every service that the government just simply won't supply, or if they do, they're always delayed and take forever to do it. So we're there on site, and we help all the communities out, and we take that responsibility very, very seriously. So our guidance that we put guidance out 2 times a year, January and July. We've actually beat this guidance in Q1, which is nice to see. Our costs came in lower, and our production was slightly higher. This year, we'll produce around 31 million silver equivalent ounces in 2025. At current metal prices, it's about $1 billion in revenue, or just shy of that, so that's not too shabby. The percentage is 55% silver, 30% gold, and the rest in the form of lead and zinc. As you can see, we had a pretty good 2024. We started off on a bit of a challenging note. We had some labor issues at one of the mines, and we were fixing a water issue at one of our other mines. But you see costs came down quite nicely over the year. Production went up nicely quarter over quarter. And then we had the big spike in production in Q1 as a result of our acquisition of Los Gatos Silver, which is coming up in this presentation. Q1 highlights, we ended the quarter off with $460 million in the bank. Not too bad place to be. Our cash flow from operations, $110 million. Our free cash flow is $42 million. Our costs are quite good. and we had a record production of 7.7 million ounces of silver equivalent that quarter. We expect quarter two to be actually better than this quarter. This only included 2.5 months of Gatos production because that transaction closed on January 16th. So Q2 will have a full quarter of all 4 mines operating. And from a location perspective, it's quite handy to have 4 mines in 4 neighboring states. These states are the most friendly mining jurisdictions in Mexico, and to have this type of synergy, we can move equipment around, chemicals, personnel. If there's a motor that blows up at one of the mines, we can just get procurement to ship the motor from another mine over to the mine that needs it. So it's really saving us a lot of headaches and time, and it's really going to show up in our cost. We lose our mic? Hello? Can you hear me? Oh, okay, good. So getting into Gatos, this transaction, as I said, was closed in January. It was a very big competitive process throughout all of 2024. We news released it in September, so it took a little while to get it closed, but it added a huge world-class asset to our portfolio, 103,000 hectare land package. We're drilling 76,000 meters there this year, and it's a 13 million ounce producer. It's a JV with a company called Dowa in Japan. So attributable ounces to First Majestic is about 10 million ounces. And you see the costs there, $12, $13, all-in sustaining costs, which is a beat, as I mentioned when I showed you the guidance slide, came in quite nicely under our guidance. And this mill, when we did our due diligence, we found it was probably the most modern mill in the entire country. It cost Gatos about $350 million to build it. Took them a couple of years to do it. And the mine's only been in production for 3 years. So we basically stepped in and bought a brand new operation. And it was really nice to add it to our portfolio. The land package, it's got a 10-year mine life with current reserves with a ton of exploration upside. I don't know if you can see that little black box in the middle of this map, but that black box is where all the ounces are. That's the 10-year life of mine in that little black box. There's showings everywhere on this property, and that's one of the things that intrigued us so much about it is the exploration upside. Because this mine will be producing decades into the future, despite the fact it's got currently a 10-year mine life in reserves. Santa Elena, this mine we put in our portfolio back in 2015. That year it produced 2.5 million ounces. This past 2024, it hit a record of 10 million ounces of silver production, of which 60% of that's gold, 40% is silver. Big drill program as well here, and good cost, as you can see, $15 all in sustaining. So the cash flow being generated here is quite dynamic. And big land package, 102,000 hectare size, another cornerstone district scale asset for us. I love big chunky projects, and because it just gives you so much time and so much potential to expand the operation. And this is what's happened. Many of you may know this, but the Ermitaño, which is in the middle there, was discovered in 2016. We broke ground and got it into production in 2021, and that was the reason why we had record-breaking years for the last several years as a result of Ermitaño. We then discovered Luna, which is to the right of that slide, and we're now running a drift into Luna. Luna will start hitting the mill at the end of this year and early next year, which is going to be great, so we can get some higher throughput. Grades are slightly lower there, but nevertheless, throughput will be increasing at the mill to take advantage of Luna. And then in July of last year, we announced the discovery of Navidad, which was pretty exciting, very high grade. It's actually substantially higher grade than the other 2 discoveries. And we're now developing that asset. We've got 7 rigs drilling into this ore body right now. We put out a maiden resource just in March of 30 million ounces. Ermitaño, just to give you an idea, when we started the drift into Ermitaño, it had 56 million ounces of silver equivalent at that time. Our geos think Navidad is much larger than Ermitaño. It'll take some time to get it into the mill. We're just now putting the plans together. We just had a meeting last week actually about it, and we're going to start driving a drift into it. It's a long drift. It's going to take a couple of years to build it. So it's basically 3 years away from getting into the mill. But we're expecting, due to the grade, that this mine will be producing more than what it's currently mining, which will be quite exciting. San Dimas, this is an asset that's been around for a long time. It's been in production for about 250 years. We put it in our portfolio back in 2018, and it's a big, 72,000 hectare project. We've got a big exploration program going on here in 2024. 112,000 meters of drilling will be occurring at San Dimas. It's a 10 million ounce producer. Half is gold, half is silver. Now, it should be bigger. We think it's got the potential to get up to north of 13 million over the next couple of years. Good cost, slightly higher than the other two mines, but it's still cash flowing quite nicely for us. And okay, I'll just jump along. I thought there was a map there, but it's not. So just jumping into Encantada, this is the operation. We had a bit of a water problem. There's 3 water wells that supply this operation. And in the summer of 2023, one of those water wells imploded upon itself. And we weren't expecting that, of course, but it did. And it took us a while to find a replacement well. We found one in April of 2024, and we got it up and running. We had to pipe it into the mill, which took another 6 months. And we finally got the water supplied to the operation in Q4 of 2024. And costs are now starting to normalize, and production starting to increase. This operation should be producing about 3,500 tons a day at about $18 to $20 an ounce. That's where it used to be prior to the water problems, and that's where we're expecting it's going to get back to those levels in the next couple of quarters. And First Mint. Many of you know that we've been selling silver to people like yourself and since 2008. And it's been a very nice part of our business. But I started getting quite frustrated with the mints in the United States who just were sitting on our silver. We would send our refined silver to them, and it would just simply sit on their floor. We actually had one mint go bankrupt in Miami. Republic Mint went bankrupt, and we had $8 million worth of silver sitting on their floor at their time. And of course, the banks move in, and they think it's theirs, right? So we had to then sue them, and we've so far got almost all of it back. But it goes to show you, once you use a third party, you're at risk. And so I eliminated that risk by opening up our own mint. I made that decision back in 2023, and it took some time. It took about a year to get it all put together. I had to get the staff in place, which was, being a mining company and opening up a mint is quite a different business. So I had to hire the right people and get the equipment, and there we go. We started production in March of 2024. We hit a record in Q4 record. Q1 we did almost $8 million in revenue through the mint, and it's a nice way to make a little bit of extra profit. Where we're getting about $3 to $5 over spot, which is nice for the business. We had about 5% of our revenue go through this mint, or pardon me, 5% of our production go through this mint in 2024. In Q1, it hit 7%. Our goal is to get 10% of our global production through this mint in 2025. Fun part of the business. Go to the website, firstmint.com. So financial strength, we're in a pretty good position, as the CEO of a company, that I put together 22 years ago, to look at our financial statements and looking at the strength of our balance sheet. And, it gives us a lot of room, a lot of flexibility. And we're doing a share buyback program right now. In the last quarter, we bought back 1 million shares. And that share buyback program, I hate the share price right now. I think it's ridiculous. So we're in there buying the stock, and we'll continue doing that as long as the prices remain where they are today. And we got about a $3 billion market cap, as you know. And here's a list of our shareholders, Lectrum being the top shareholder. That's Tom Kaplan, who came over from Gatos. Great supportive shareholder, and there's a whole list of others there as well. And the analysts that cover us. And our dividend policy, it's based on 1% of revenue. So, assuming we have somewhere around $1 billion in revenue this year, that would be $10 million going out the door in the form of a dividend. There is, we are now talking about potentially increasing it. There's no decision made yet. I want to see the next couple of quarters and obviously monitor the metal prices because that's, we're highly affected, by the silver and gold prices. So assuming everything stays similar to where it is today, I think starting in 2026, you could probably see this dividend being increased, or at least that's my hope. And future catalysts, we have a huge drilling program this year. Look for announcements in the next 4 weeks on Santa Elena. Some pretty interesting results coming out. We'll also be coming out with a news release later in the year on San Dimas drilling. 270,000 meters of drilling, over 30 rigs are active, so it's a pretty big program. So I think that's one of probably the most exciting things. And just our financial statements, just the cash flows that we're generating, I think should be a huge catalyst to assist the stock. It's only one quarter, and I think the institutions out there want to see back-to-back quarters similar to Q1, and assuming we can pull that off, which I think we can, I'm sure the stock will go through some kind of re-rating over the next couple of quarters. And that's really it for my presentation.
Thank you, Keith. We do have 2 minutes for questions if anyone has any questions.
Okay.
If not,
Do you see chances to, let's say, to these silver producers to be bought by big tech giants like Samsung, Apple, or anything, any kind of this scenario? How realistic that could be?
You've been watching my YouTube videos? Yes, look, I think that is highly likely. I'm not sure if you've seen the movie I, Robot. If you haven't, I'd suggest you watch it. But you have a conglomerate. Let's call, Tesla, for example. Or Apple. One of these companies. They're having supply chain problems right now. I think there's going to be a problem in the paper markets. You've got this 5-year deficit in silver now, and it's coming from somewhere, but that deficit can't last forever. And these banks are selling these forward contracts to supply metal to the industry. Apple or whatever company, BMW, doesn't really matter who you're talking about, they're just simply not going to get their delivery on schedule. And they're going to phone the bank and say, hey, where's my metal? I need this to produce my products. And the bank says, sorry, I can't get it to you right now. And the compliance is going to walk down to the trading desk and say, what's going on? And the trading desk will be forced to cover their shorts because they're offside. And compliance steps in, the lawyers step in and collapse the whole. Yeah, I know them. What about them?
They are telling that there is no shortage of silver.
Well, Christian and I don't see eye to eye, so let me put it that way.
Well, thank you, everyone.
I think I know more about the silver market than he does. let me put it that way.
Well, thank you, everyone. And with that being said,